Hello everyone, welcome to this video. In this video I'd like to talk to you about what's going on with the fossil fuel industry because this industry is currently facing a lot of headwinds and is in a very tough spot, and in specific two companies are having big problems. One is Shell and the other one is Exxon Mobil. And in talking about why the industry is in the tough spot that it currently is in, I would like to zoom into these two companies for you to better understand what's really going on. The two companies are facing similar situations, but to some extent are also quite different in how they deal with it. So without any further ado, let's move into the subject. Let's first of all talk about why the industry is actually facing the difficulties that it is. So it starts first of all with the trade war some years ago. If you remember, US and China raised trade tariffs one after each other, accusing basically the other one to have started first. The US basically was mainly involved in the trade war because of the trade balance between the US and China, and US was arguing basically that it was favorable towards China. And so through these tariffs, the US wanted to correct the imbalance in trade, and that's why the US basically started off with these tariff hikes, and of course China retaliated. So what this led to is a disruption of global trade, and this got countries and particularly companies very anxious. Like, now, where is this trade war going to go? What's going to happen to my inputs that are coming from, for example, China? Can I still export to the country? Can I still import from it? And amid all of this anxiety and insecurity, of course, what you saw is that companies reduced the amount they were going to invest, and they reduced the scope of investment, and of course also reduced the risk of their investments, because they of course didn't know what this was going to lead to. This is going to lead to a global recession even, and that would of course be the worst case scenario. So when this happens, when investments drop, then of course you also see that production at some point is going to follow, right? You will get less production because, again, the question is, can I export it as freely as I want? Is there going to be demand for it? Or if we're really going to get economic trouble, are people also going to buy less? So production also decreased along with the investments, and so in general we saw less economic activity. And now if you think about what fossil fuels are all about, particularly gas and oil, it's of course about energy. If there's demand for energy, if there's demand for gas and oil, and particularly this happens through investments and through production, then of course you get that the price is going to increase, price is going to rise. If you have less economic activity, then of course the flip side is going to happen, and we're going to get to this in a second. So the trade war is one thing, COVID-19 is another big thing that just came after the trade war, and one could even say that the trade war was still lingering on when COVID-19 impacted the world. So what did COVID-19 do? The COVID-19, of course, led to a global pandemic, right? And amid the pandemic, we got, of course, restrictions in terms of how we were moving, because this pandemic, of course, and particularly the virus, is spreading because people are interacting. And if you reduce people interaction, then of course you can also control the pandemic, at least within countries or at least within regions. So we saw lockdowns restricting how people were going to move, right? Sometimes it was just for the weekend, sometimes it was for a whole week, sometimes this was for months. So if you get the lockdown and if you restrict people's physical movement, of course they cannot consume as freely as they want, right? They have to do internet purchases, but you cannot get everything through the internet. And even if you can, another thing that the pandemic led to is, of course, companies that are closing down, companies that normally were dependent on being able to, let's say, fly things to other countries, companies that are often dependent on being able to sell things through people physically coming to companies. These companies were closing down, and people, turned unemployed. People's purchasing power decreased. So even if people want to buy, also in this situation they couldn't because their purchasing power decreased. Then there's also this psychological component. People don't know what's going to happen in the future, right? So are these lockdowns going to continue? Am I going to lose my job? What's going to happen to my purchasing power? So also psychologically, people didn't want to buy as much as they normally did. So if you take all of this together, less demand from consumers already decreased basically the production that companies did and the investments that company did, because of course they don't want to produce something that there's no demand for, and they don't want to invest that much if in the future consumer demand is predicted to not be as high as they hoped for. On top of this, of course, if you want to manufacture, if you want to produce, people need to be in this closed space together. A lot of people, particularly so, especially for many products that require a lot of craftsmen, right? So if you cannot have a lot of people in a factory, in a producing plant, if you need to cut down on how many people are there, or if you cannot have anyone in it, which basically was the case in March and April in many countries, then you cannot produce anything at all. And again, this also was a big problem. So consumer demand decreasing, production demand decreasing, and production and investment altogether decreasing led, of course, to a decrease in economic activity, just like basically happened because of the trade war. But this was basically an additional blow to the global economy that came basically in parallel to the trade war. So we had two big hits to economic activity. And all of this, of course, leads to a demand decrease when it is about energy. If you're not going to produce as much, if you're not going to invest as much, then you also don't need that much energy. So what does this lead to? This leads to a decrease in the price of energy, right? Because the thing is, demand can change a lot when it is about energy, when it is about oil and gas. But production is not that easy to decrease when we talk about oil and gas. You have a lot of upfront investments, then you have your oil pit basically, or your gas pit, or how you want to call it. And so that production has to keep on going, because you cannot just close the pit and open it later again, because there are a lot of startup costs. So you saw that demand decrease, but production could not decrease that fast. Oil and gas companies were still producing, and then they had to find a spot to put their oil and gas, right? Because now it became a storage problem. And this storage problem also became a massive blow to the oil and gas industry. And this, altogether with the decrease in demand, led to a decrease in the price of oil and gas. It became an overabundance energy input, and this of course led to a decrease in income for oil and gas companies. If they cannot sell the oil and gas, or if they cannot sell it at the price that they want, then they're going to face a massive hit in terms of their income, a revenue decrease, and with this of course their profits decrease, because they cannot lower their costs. And a revenue and profit decrease with similarly staying costs, of course, became a major blow to many gas and oil companies. So this is the economic side of things. But then, of course, there's also a lot of social pressure already for many years towards the oil and gas industry, because they're, of course, a very polluting sector, right? Oil sometimes being dumped into the sea, sometimes in particularly African countries not, abiding by, let's say, international rules. Same thing actually also counts for gas. And so amid all of this social pressure already was a thing that was lingering around. Many shareholders, many consumers already were not that happy with practices in the oil and gas sector. Then, you have also this thing that, fossil fuels are finite, right? They're not infinite. At some point, it's going to stop being around, because we've taken all of it out of the ground. And so that fossil fuels are finite, of course, means that fossil fuel companies, oil and gas companies, need to at some point do something different, because if they don't, they will cease to exist, right? It will be the end, because there's no oil and gas anymore to get out of the ground. So in time, these oil and gas companies need to prepare. And if you have already a decrease in energy demand from COVID-19 and from the trade war, and if you already have these social pressures that were lingering around for longer, then suddenly this thing, the fact that fossil fuels are finite, is going to become more and more attractive to something about. And here's where Shell and ExxonMobil differ. So getting to the company-specific response to all of the issues around fossil fuels, we saw, first of all, why are these two companies important? Well, there are some of the largest multinationals around. ExxonMobil was the largest US company only some years ago, and since then it has lost about 60 to 70% of its stock market value. And both companies actually are back to their March stock market value. So if you remember, in March we had this big stock market crash, right? We saw that the stock market came down like by a massive amount, and it was really a crash. And after that, a lot of companies have restored themselves, because this crash was actually a matter of people being afraid, people responding in total oblivion, if you wish, because everything is going to crumble and COVID-19 is really going to rock the economy after the trade war, right? So it was basically out of fear what happened, and then we saw the stock market come back because actually the effects were not as bad as were thought. But Shell and ExxonMobil have not recovered. They're still at the March level. And this, of course, is a problem. This means that investors are not really seeing that many prospects for these companies. They don't really see good things happen in the short to mid-term. And this is an issue. Both companies are also, amid all of the things that are happening, firing thousands of people, because as said, your revenues and your incomes are decreasing while your costs are kind of staying the same. It's not that difficult to bring those down. And so one of the most flexible sources of costs is, of course, firing people, and that's actually what they're doing. So how ExxonMobil and Shell are different in that ExxonMobil made actually a lot of wrong investments if you look at it now ex post. So if you look at it, ExxonMobil kept on investing in shale gas, for example, in shale oil. It kept on pouring money in fossil fuels. And now, amid there being less demand, particularly for fossil fuels, because of social happenings, because of fossil fuels being finite, but more so because of the trade war and COVID-19, you see that this is actually blowing up in the face of ExxonMobil. They've spent money on it that they perhaps better could have spent on, sustainable sources, which would perhaps attract more investors, or at least they could have kept it as a company reserve. They did it, and now they're in massive trouble. You see actually that Shell is taking a very different approach. They have openly spoken about them wanting to transition, them seeking a more sustainable future. They already have some sustainable energy projects and activities, but they of course want to expand this. And so the company, Shell, is particularly now thinking about how can I make this transition? Because don't forget, it's not easy to transition from being something to being something else. You cannot have both at the same time if you don't want to look like a hypocrite, right? If you're saying I'm green, but you're also in fossil fuel, well, that doesn't work. And if you're just doing it for profit, then again, you're not really responding to social pressures. But if an oil and gas company wants to become a sustainable energy company, it has to cut inside itself, right? And basically it will be shooting in its own foot, especially for the short term, because it will have to stop investments in oil and gas, it will have to sell some aspects of its business, and only through shrinking in that part it can redirect its money, its investments to what is really deemed being important and interesting, being sustainable energy. And actually Shell is going in that direction. They're saying that they're firing people in mainly the polluting branches, in oil and gas industry branches, and that the money that's going to free up from there, they're going to put in sustainable energy. But ExxonMobil is actually still thinking that fossil fuels will be lingering around for longer, that there will be still sufficient demand in the short and mid-term, and that there's no need for now to transition. And it's basically hoping to benefit from other companies transitioning to other areas. Now, one thing that has to be thought about here as well is that certain companies are actually becoming a startup in the area of sustainable energy. Okay, so they're really out there to benefit from this slow transition and from this underestimation and sometimes even from this negligence of the oil and gas industry. And so they're thinking like, hey, they're not really active in this part, so there are not that many entry barriers. Why don't I enter in this industry and see what I can do here? And so now we're already seeing a lot of startups in the area of sustainable energy. And the question is, are ExxonMobil and Shell not already too late? Okay, they don't want to be too early, because then they're going to lose out on their oil and gas income, and with that, of course, they're going to lose precious income that they could have gotten, and the competition will benefit from their exit. But at the same time, you also don't want to be too late if you don't want to be just a company for just another 10 to 20 years. If you want to keep on existing for another 100 years, then of course you should be able to make this transition in time and not before someone else is going to be this major player over there that you're not able to beat. And we are kind of seeing this already happen in the automotive industry, where Tesla is benefiting from the slow transition of Volkswagen, for example, of Mercedes, of BMW, of Toyota, and so on. And that's how Tesla could profile itself as being the electric vehicle company. And we might be seeing something similar to the oil and gas industry, and that's what Shell is basically trying to prevent by transitioning now, hoping that's not too late already. But ExxonMobil is not really there and is not really seeing it happening in this industry. So let's see what's going to happen. Who knows? I hope you enjoyed the video, and if so, please don't forget to hit the like and the subscribe buttons. I wish you all the best in the world and hope to see you again anytime soon. Take care.